Auto in the green. And Jupiter Wagons aims to improve return on equity by 20%, says MD Vakil. While speaking to NDTV Profit, the management paints a bullish outlook. The stock soars over 3% on the back of order wins. Oil and gas companies zoom in trade with ONGC, HPCL and Indian Oil hitting 52-week high in trade on the back of JP Morgan and Morgan Stanley reports. And Bajaj Auto in the fast lane. Board to meet today to consider and approve a proposal to buy back. If it goes through, this will be a second buyback for the company in the last 2 years.
Hello and welcome. This is Hot Money. I am Agam Vakil and with me is Hiral Dadia. Well, we are going to take you through what's happening in terms of the most active stocks in today's day of trade in this edition of Hot Money. But at the moment, let's start by taking a look at how the markets are faring. And at the very present, we are seeing the Nifty as well as the other key benchmarks trading at day's lows. There's been a lot more weakness coming through over the course of the last couple of hours of trade, and a lot of that is on account of increased volatility. Perhaps a lot of traders are now at the moment taking off their positions even as we move into the early session, or rather the early legs of the earnings. And for now, of course, what's really weighing on the indices at least is something like a UPL. That's down around 2.8%. We also have a lot of weakness in the FMCG sector as a whole, which has in fact been weighing on the indices. So something like a Tata Consumer Products, which is down 2%. Hindustan Unilever, that's down around 1.7%. And ITC is the other heavyweight, which is also weighing on the indices. That's down around 1.5%. In fact, if you pull up the constituents of the Nifty, you will notice that it is essentially the FMCG pack which is, bringing the indices down, and that's also the reason why 150 odd points declines against just about 16, 17 odd points advancing. So we don't have too much to speak for as far as the strength in today's day of trade is concerned. Very quickly, let's address what's happening in the broader market as well. And, when it comes to the indices, they are also moving largely in tandem with the benchmarks. They're also trading near day's lows. That's the mid-cap 150. And the small-cap 250 is also, well, not at day's lows, but it is looking at some amount of weakness. That's as far as your markets are concerned. For certain, there is an increase in a little bit of volatility. The question is, can we expect this as a new trend that is a downward one, Hiral?
Absolutely, and that's going to be interesting because if you see the kind of fall we are witnessing right now, nearly 200 points from the day's highs in terms of Nifty 50, and it's mainly the banking counters which are causing that fall. But before we get into stock-specific action, the stocks that we are going to discuss today as well, we have names like Marico, GCPL. Both of these counters seeing pressure on the back of the business updates. IOC, BPCL, again, good names, seeing a buzz in today's session from the oil and gas pack. Sula Vineyards is the stock of the day. Alok Industries, more than 60% gains in the last 5 trading sessions. Spark is seeing some pressure, and this is ahead of the update that will come on Saturday. And you have a Jupiter Wagons that is in focus. But let's welcome in our guest, Sharmila Joshi from sharmilajoshi.com to discuss further. Sharmila, good morning and welcome to the show. My first question coming to you before we get into stock-specific action is what's happening with the markets right now. A clear 200 points cut coming in terms of Nifty 50 from the day's highest point level. And you have major pressure that's building in terms of bank majors. FMCG is taking a beating as well. What do you make of this cut? Is this a trend that you're expecting to continue, or this is just a one-off according to you?
Yes, I think as you all were discussing just a little while earlier, it is sort of surprising the kind of cuts that we are seeing today. Largely because, yes, there have been some you can say mixed reviews on, you did have like Bank of Baroda and a couple of other banks sort of report a weakish growth. Again, I think from the FMCG pack, the news flow wasn't that great. and we are just starting earnings season. So I think it's probably
Give me a break.
combination of all these facts and the fact that markets were, at the levels at which.
Sharmila, I'm going to just interrupt over here for a second. You just have the AMFI data which has come in, wherein the net AUM as on December 31st has crossed the 50 lakh crore mark. And this is the big breaking that we're picking up with regards to where the AMFI numbers go. This was something that we've discussed earlier as well. And overall, if you go to see 50 trillion, that's the number that has been crossed so far. Overall, if you see in terms of the SIP contribution or the latest data as well, this was a number that the street was eyeing, Agam. So 50 lakh crore mark is what the AUM has crossed in the month of December. We will try getting Alex as well to get us more details on this. But let me go back to Sharmila and get her, let her continue as well with the conversation on markets. Yes, Sharmila.
So yes, I think congratulations to all of us, and it just sort of ties in very nicely with what I was about to conclude with, that the fact that this market really is on, it's really a domestic focus story, and we are seeing the way participation is increasing in equity as a product, and that has really been what has kept market at the levels that it's at. So I think that any concerns that we may have, yes, there will be concerns, and I think that again is a great sign if you're concerned of how earnings will be, what outlook IT companies will give, etc., etc. But market will take all that in its stride, and you should use every opportunity that you see in the market when it falls. Keep your buying list ready and continue to invest, because clearly, I think that as this data points out, we are looking at better days ahead.
We're looking at better days ahead, but let me head across to my colleague Alex as well, who will be breaking this down for us pretty closely. Alex, this was a number that all of us were eyeing on the street since quite some time, and you have the AUM which has now crossed the 50 lakh crore mark. What do you make of this?
Well, it is significant, Hiral, but as we're speaking right now, I'm still waiting for the upload of the numbers that will break down all of the individual categories. Of course, that 50 lakh crore number was expected to come through primarily because the underlying has gone up quite substantially, and if at all the numbers are going to be along the trend that we've seen in the second half of 2023, then you will see that a lot of money has flowed into both the mid cap as well as the small cap end of the market, and the equity AUM as a whole, which stood at close to 20 lakh crore at the end of November, would have gone up quite substantially as well. So a few more details are coming in. If you look at the year-on-year growth, it has gone up from levels of 39 odd lakh crore all the way up to 50 lakh crore. So what a number that is. And this is on the back of very consistent flows into the mutual fund industry, the likes of 50,000+ crore flowing into just the actively managed mid-cap and small-cap numbers. But I will toss it back to you for now while I try and get some of the key details from the data release, which I'm still waiting on, Hiral.
Sure. Thanks, Alex, for getting us the details as well. So that's the number that we're eyeing so far. Other details are yet awaited with regards to where the mutual fund data goes. But let's head across to a couple of stocks that we have been talking about. FMCG, that's a sector that is on everyone's radar. And this is on some bit of negative numbers that have come in as well with regards to where the third quarter business updates go. Now, among these, you have names like Marico, Godrej Consumers. My colleague Mahima joins us with more details on this. Mahima, if you could take us through with regards to both of these companies, what are the updates indicating and what are brokerages making out of it?
Right, Hiral. So as you rightly mentioned, Marico and Godrej Consumers are facing a downtrend today. Marico's business updates came in where domestic volumes grew low single digits and international business is also in mid single digit, and the consolidated revenue declined on low single digits level. And however, Marico has seen an uptick in their margins because of the lower raw material prices. However, their revenue has remained flattish. There were a couple of brokerage reports that came out on Marico. One was Nomura on Marico, which maintains neutral with a target price of rupees 600, and they're backing this on the reason that another quarter of weaker than expected sales Marico has posted, and they have also said that they still remain strong in terms of expansion year on year, continue the softness in copra and edible oil and crude derivative prices. Then we also had City on Marico, which has maintained a buy rating again for Marico, and they've also mentioned that they expect 2% overall decline in revenue. Then talking about Godrej Consumer, the volumes growth in India were in double digit. The volumes growth in Indonesia were close to double digit, and for Africa, US and Middle East, they saw a single digit sales decline. And in Latin America, they saw a positive volume growth. However, despite of all these volume growths, the sales growth has remained muted, and they continue to drive their year-on-year expansion in EBITDA. They're trying to ramp up that. We also had a couple of brokerages report on Godrej Consumers, where Nomura said it maintains a buy rating with a target price of 1240 and believes that the stock price will likely see more pressure in the near term. Then we had Noama on GCPL, which said that the EBITDA will grow around 11% versus initial expectation of 8%. And then we had City on GCPL, which has reiterated its buy rating and still GCPL continues to remain the top pick in consumer staples and has constructive view in the next 6 to 12 months. So despite of the downtrend in their company updates, there are brokerages which are still bullish on consumer stocks.
Okay, thanks so much for that, Mahima. Since we have more updates with respect to the December AMFI data, we also have with us Sunil Subramaniam, MD of Sundaram Asset Management, who's joining us on the show. Sunil, good afternoon, and thanks so much for joining in. Your initial take, of course, we're going and making benchmarks every week, every month. This is yet another benchmark, and this is from, of course, the mutual fund industry space. Your initial reading, and what can we expect going forward?
I think this is a fantastic milestone because it's a culmination of years of hard work by the fund managers, by the customers, by distributors in growing this. And our journey is ultimately the 100 lakh crore mark, the 1 trillion mark. And I think that this will make sure that over the next 3 to 4 years, we can expect to reach that. This also comes at a time when our country's market cap has now become the 5th largest in the world, with a 3.8% share of the world market cap. So I think the stock market's growth along with the industries, and this growth, though the market grew 20% last year, it is also that about 60 companies have come in through IPOs. So it's an expanding market, giving a larger universe. And I think ultimately the journey of making sure that the retail customer finances the growth of the country through the capital markets. I think mutual funds are playing a very important role in that, and it's a very important milestone which we need to celebrate.
Get in my colleague Alex to get into the conversation, and if you can perhaps give us more details on this one. Alex, what do you have for us?
Absolutely. Agam, so I'm looking at the fine print here, and we've got an outflow overall for the industry in the month of December to the tune of 40,685 crore rupees. And despite that, you've seen the total AUM on a net basis hit about 50.78 lakh crore rupees. And the reason for that is a significant inflow into equity mutual funds actively managed during the month of close to 17,000 crore rupees. A bulk of that once again flowing into the broader end of the market. So the mid cap as well as the small cap actively managed funds have gotten as much as 1,400 crore and 3,850 crore rupees worth of net inflows on a respective basis. You also have flows of as much as 6,000 crore rupees into thematic funds during the month of December. Now, large caps, I must point out, have seen a bit of an outflow, 280 odd crore rupees from actively managed large caps, and this is more or less what we've been seeing. So, Sunil, we've seen a few of these numbers come through, and they've more or less carried through the trend that we've seen through 2023, and that SIP number has come in at over 17,600 crore rupees. What are you taking from that fine print?
So I'm taking that the retail customer, I think the new age customer is now willing to participate in the capital markets because I've also noted that the folio count in small cap funds has now overtaken large cap and mid cap. And 2 years ago, or maybe 3 years ago, they were at 50 lakh folios. Today we have more than 1.3 crore folios in the small cap. So the new age customer, I think is willing to take greater risks. That is apparent. The second is that the domestic economic growth story is naturally played more through the small caps and the mid caps, and hence people have a natural affinity to putting that money in. The good news is that the SIP, it is coming largely through SIP numbers. And last count when I saw, almost 30% of the total SIP flows were coming into small and mid cap. So people are entering a high risk, high reward segment of the market through gradual allocation. And I think a 500-600 crore growth per month in the SIP book will mean that we will soon hit 20,000 crores in SIP. What this also helps the fund managers to do is to gradually keep buying these smaller mid caps, keep adding new companies to their portfolio. Yes. So I think overall, I think it's a very healthy method of growth for the industry. And I think as long as the good times last, this will continue to grow. And I think with the December 3rd election result giving a good continuity to the continuance of the NDA government, I think has also reinforced the strength and the confidence in the equity markets, which is also there seen in the FII.
All right. We're also joined by Mr. DP Singh, who's the joint CEO of the largest mutual fund in India, that's SBI Mutual Fund. Mr. Singh, thank you so much for joining in. It's a big number and it's a big win for the industry as a whole. But most importantly, I think the SIP figure that is now at a record high and that 50 lakh crore number for the net AUM for the industry stand out. What do you make of these numbers and what are you seeing from the ground in terms of the participation beyond just the urban centers?
Yeah. First of all, thank you very much for having me on the show, and this is definitely a very momentous moment for all of us to have a 50 lakh crores AUM number. So this is definitely a milestone which the industry was looking at for a long time. And see, one thing is very clear, that financialization of assets in India is growing and growing very, very fast. And that's evident from the numbers, evident from the SIP numbers. 17,600 crore is not a small amount. It's basically more than $2 billion with the average ticket size of less than $25 from international standard point of view. So this is very, very healthy. At the same, we are very happy, at the same time concerned that people are taking more than required risk, more and more money flowing into small cap. My only concern is that people may not burn their fingers over the period of time, because we have seen 3-4 cycles, and once some set of people burn their fingers, they don't come into the market for a decade. Though this time is a little different, because most of the people who are investing, they are much more evolved than ever before. They understand the risk, but at the same time, for the first timers coming into the highest risk category is something which I think the outflow from the large caps and more money coming into mid and small cap. I absolutely echo the views of my colleague who spoke before me. That's good that we are getting good capital for good companies in India. But at the same time, it has to be a balanced role, and we as an industry will definitely make sure that we are able to educate the people by and large in the country. But very, very happy for the numbers which have come.
Mr. Singh, one last view on a category that seems to be growing very quickly, and that is the hybrid space. Possibly on account of the change in the regulations or the tax norms at the start of this current financial year. 15,000 crore inflow once again. What do you make of that?
No, but that's how it should be, because see, even if the hybrid category, you look at it, anybody who is putting more than, any scheme which is putting more than 35%, still enjoying the benefit of say debt taxation, that is indexation and all. So that is the category which need to grow from the first timers. That is what our view is. And we are trying to get, because the idea is the industry has to grow vertically as well as horizontally. We need to get more and more number of people. The growth in the numbers is not aligned with the increase in the number of investors. Though folios are increasing, SIP numbers, one may be having more than 2, 3, 4, but the new number of people getting into the market, I think that pace is little slower. We need to get more and more number of investors into the industry, mutual fund industry, which is one of the best wealth-creating industry in the country.
On that note, Mr. Singh, as well as Sunil, thank you so much for joining in and for giving us that perspective. We have to slip into a very, very quick break, but we're back on the other side with a lot of stock-specific action. Do stay tuned. This is NDTV Profit.
Welcome back. We put the spotlight on oil marketing companies. Now, at the moment, we are seeing a lot of strength in a whole host of these names: IOC, HPCL, BPCL, all of them up and about. And even though they have given up from day's highs, well, most of them are trending in the green as we speak. Reason? Two broking notes coming in, and these broking notes this time are not as much about the price of oil or the price of crude as much as it's about these companies themselves. So right at the top, we have Morgan Stanley, where they are talking about infra upgrades coming in from these companies, which in fact could add as much as $4 billion to the EBITDA over the next 3 years. And moreover, they're expecting an improvement in margins consequently because of these infra updates coming through. And of course, India's interest in Venezuelan oil imports will add to as much as 15% to earnings. We also have JP Morgan, which is positive on the OMC space, and they say that OMCs are unlikely to sustain profit levels if the rate cuts happen. They haven't come through yet, but they are positive because of inexpensive valuations when it comes to OMCs. Sharmila, let's take this up with you. What are your views on something like a BPCL, HPCL, IOC, and how are you placed here?
Yes, so while I completely agree with everything that you said, what was mentioned in the broking notes, I just feel that, in the Indian context, when you look at whether it's the oil marketing companies or, the downstream companies like an ONGC, the problem is that crude is such a sensitive commodity that, you're not really allowed to operate in that entirely, that environment where you're taking your own calls and your own decisions, which is why we see time and again. For instance, now people are thinking that since we are going into an election year, you could see some price cuts. If the reverse were true, and if you had companies making a profit, we've seen windfall tax get in, etc. So while I completely agree with with the argument that the enterprise valuations, everything is absolutely in favor of these stocks, this sector is something that I have sort of always steered of. I've just steered clear of this, largely because I think that it's such a sensitive commodity, both oil and sugar, that I'd rather not be an investor in either.
Right, so that's with regards to where OMCs are concerned. Moving from there on, Sharmila, another stock which is really buzzing in trade is with regards to where Sula goes, and this is one in terms of the PLI scheme for wine companies that has been extended. Plus, you have a lot of brokerage reports which have come in and upgraded the target price on the Sula, for example, a CLSA. What would you recommend on a Sula? 15% up move already. Still a buy?
Yeah, so I think, that's the ridiculous thing, like to see a 15% upside in a day. At around 500 levels, I did think it looked good. My concern with Sula is only this, that very honestly, the kind of projection that were made, that, that wine drinkers are going to increase in this proportion, etc., we haven't really seen that happen. Having said that, I think the way they've positioned themselves, the kind of products that they have, etc., I think that all is absolutely on point. So I would be a buyer in this stock, but probably at lower levels.
Right, would be a buyer, but at lower levels. Thank you, Sharmila, so much for getting us your views on all the stocks that we've discussed, but completely out of time. With that, it's a wrap on this edition of Hot Money, a buy from Agam and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.